Welcome to the You, Me, and BTC podcast. This is episode 12. A few weeks ago, we told you about a popular gold investor, Franklin Sanders, who thought that Bitcoin was broken because of the MtGox failure. We asked him to get his facts right, and he responded with a 14-point criticism of Bitcoin almost entirely unrelated to MtGox. Today, we'll review those points and do our best to explain why we think both Bitcoin and metal are truly valuable. We couldn't do this alone, however, so another wise precious metals investor, Robert Michael, the founder of CoinStax's, is here to help us out. He'll keep us on track as we work our way through all of these complicated ideas about what money and value really are. This in-depth discussion has created our longest episode yet, so get comfortable. Your hosts are Tim Baker, John Stuart, and myself, Daniel Brown, and we're joined this week by a special guest host, Robert Michael from CoinStax's. Here we go! Welcome everybody, this is going to be episode 12 of the You, Me, and BTC podcast. We have another special guest with us today. His name's Robert Michael. He's the founder of CoinStax's. That's Stacks with an X. And he's working on that. We're glad to have him. And he's here to help us discuss some ideas all about gold and silver. So, Mr. Michael, thanks for joining us today.
It's great to be here. Thanks, Daniel.
Well, we mentioned a couple weeks ago about Franklin Sanders and how he was, in a way, he was misunderstanding Bitcoin. I'm not going to describe everything again, but the main thing is that when MtGox went down, he thought that the problem was with Bitcoin. He saw transaction malleability or mutability, however you want to call it. He saw that as a flaw with Bitcoin, even though all these other exchanges are able to deal with it. And really, it's like a fundamental part of Bitcoin and of math in general. So anyway, it seemed like he was saying that Bitcoin was broken. That's why I contacted him, and I asked our listeners to do that as well. Just, ask him to get his facts right. I don't want to ask him to support Bitcoin because, if you don't trust it, you don't trust it. I'm not going to force everyone to trust it. That's almost the whole point of Bitcoin is it's an opt-in. If you want to do it, you can. If you don't want to, you don't have to. But I want him to get his facts right. And the fact here is that the sole problem was really with MtGox. It had nothing to do with Bitcoin. It was poorly run. Even if it was transaction malleability, that was not handled correctly, or it could have been theft. There are some theories out there about what might have caused this. No matter what it was, we wanted him to know that it was MtGox and that people were entrusting their money to MtGox, and it wasn't a problem with Bitcoin. Before we get started with the list of points here, Mr. Michael, do you want to just give us an overview, just so we know who you are and all about CoinStax's and everything?
Sure. So, I founded CoinStax's about a year ago. At least got the idea rolling. But we only launched a month and a half ago. And so we're really just here getting the word out, letting everybody know what we're up to. And that's mostly educating people on why it's necessary to diversify yourself into multiple types of real money. And we're big believers in getting rid of the fiat currency in your portfolio if you can.
Yeah, that's great.
So what we do right now is we're actually physically delivering bullion to your door, rather quick shipping, and straightforward. We only accept Bitcoin right now.
Yeah, that's awesome. And I've always thought always as in for the past few weeks that I've known about you, but I've thought that that's something that sets you apart is that you exclusively accept Bitcoin, and that's pretty awesome.
It definitely simplifies things, and then it also just helps me stay motivated, and I'm a big believer in Bitcoin, so it's also just part of me advocating for it.
Yeah, I think you could call us believers in Bitcoin. We always like to say that it's, at least I do, and I think Tim and John agree, it's brand new, and there's no historical evidence or scientific evidence that is going to prove that it's going to work or anything, so we can't actually prove that it's perfect. It's not perfect in some ways, but I think you could say we believe in it and we trust it, even though there's no proof that it really should work or that it really will work. It's still an experiment, and we'll have to see how it turns out.
It's definitely not perfect, but I think that's what's great about the way that it's open source, is that we have now hundreds of competitors in the altcoins, and should Bitcoin really start to go off track, or it's just missing something, and altcoin can show us what it's missing. And that's really what's great about this experiment.
We talked about that a bit last week, how altcoins are a form of competition, and we'll see how it all turns out. Our goal today, with this conversation with Franklin Sanders, actually his first response to after I first contacted him and explained this, his very first response was a pretty detailed 14-point criticism of Bitcoin. I'm not sure if he actually wrote this for me or if it's something he had in his back pocket and he just pasted it. I almost hope that he didn't write it for me because I'm not sure I deserve that much of his thought and time. But anyway, today we're going to go through it and respond to each of these points. It's not really related very much to MtGox and that whole idea, except for maybe 1 or 2 points. It's more about Bitcoin in general. So even though it started with MtGox, we're just going to respond to each of these points. And I guess we'll just jump into that. Number 1. I do not care for Bitcoin for the following reasons. It is fiat money, if money at all. In other words, it is creating money out of thin air, just like the Federal Reserve. Only it's private and doesn't have the gun at our heads of legal tender laws to force us to take it. If you want to take that chance, it's fine with me, but I don't. I guess the main idea there is that it's fiat money, and it can be hard to define fiat money, I guess, for anyone. There's different aspects that could make money fiat. But he says it's creating money out of thin air. That's a little difficult. I mean, in one way, it's easy to see where anyone could think that, because that's with mining. A lot of people think they're getting free money or something, or they're creating money or something like that. I mean, that's slightly understandable, but one of the biggest things with that is that overall it's limited. There is a hard cap, and maybe you could say we're creating money out of thin air for now, but that's only to get it out there and to get things started. It's not meant to just create money all the time, anytime.
I think that by saying thin air, he's getting at the idea of fiat currencies in which you can just print the money endlessly. So Bitcoin's a little bit different because you really only get as much as you put into it. There's still an effort-based system where you're incentivized through your mining efforts with an amount of Bitcoin equal to that you've put forward in work. So this is more like mining gold, where if no one's mining it, you could probably stumble on gold rather easily when it was first starting out. But as other competitors joined in, it became more difficult, and over time, there's less of it available. And then he also calls it fiat money, but that's really not true, because if we look at the Latin definition of fiat and currently what it is, it means that something is given authority by decree, or it just let it be, is what fiat translates to. Bitcoin is first and foremost a protocol, of which the first use for this protocol is a currency. And so I don't think that you can say, hey, here's this money instantly. This is really a ledger that transfers value, that says, I own this string bit. This is not something that says, hey, here's this currency, go run wild with it.
I'm glad you actually mentioned the Latin definition of fiat. I never made that connection myself. I've heard that word before, and I've heard how fiat is a command and things, but I never actually put that together with fiat currency and how that, it's money by decree or something like that.
That's what the governments make it money, is because they say that this is the money. They monopolize the market share of money by saying this is the only money that you can provide us taxes with. And so if they have a sufficient control on the monies in the economy, then they can effectively monopolize it to just be the one they're creating. And so that's the fiat currency.
Yeah, and that's pretty cool, because then with Bitcoin, nobody says it's money. It's that people decide for themselves that, sure, I'll accept Bitcoin, or I'll sell you Bitcoin for this much money and things like that. There is no decree, and that's because, like we said, it's opt-in. Everyone does what they want themselves, and There is no outside decree that says this is money. So yeah, that is pretty cool.
Yeah, I just want to say real quick that he says it's creating money out of thin air just like the Federal Reserve, only it's private and doesn't have a gun at our heads. So it's just like the Federal Reserve, except that it's not like the Federal Reserve at all.
Yeah.
I mean, it says
Right.
federal in the name, so obviously that rules out it being private.
It's surprisingly
It is a
enough,
private.
it is
yeah.
private. It's just that it's got the monopoly of being our money note creators. So they're actually owned by private banks and receive a profit. But using the word federal in there seems to make it seem like it's part of the government when it's not.
Yeah, it's not treated as private, I guess is what I'm getting at.
Right,
And-
I agree.
Yeah, he basically just says it's like the Federal Reserve, and then he says that it's not at all.
Yeah.
Yeah, John, you were saying that he says this is like exactly what the government does, except it's not the government and it's private, and that makes about as much sense as saying that rape is the same thing as consensual sex, except because it's not voluntary. There's a big difference there. Voluntary is everything that really matters there.
Actually, number 2 is pretty short and simple, but I have a little bit to say, well, quite a bit to say about it. This is number 2. I don't trust computers. If someone can write the program, someone can hack the program. Somebody already did. Now, that was my initial thing, is that nobody hacked the program. People hacked MtGox, even though we aren't sure. If it was transaction mutability, it was MtGox and their system that was hacked, not Bitcoin. That's my main thing. But he said, and I don't think it's in here, but in another one of his replies to me, he basically repeated this. He says, if you can write it, you can hack it. If it was written, someone can hack it. And it's partly understandable because, like, there's probably is some way to hack any sort of program. And with Bitcoin, I suppose you could brute force attack it, not reasonably, not statistically, but theoretically. Yeah, maybe you could brute force some things, and I suppose you could call that hacking. But the main thing with that is, in his other response, he said that it's like a fundamental nature of computing is that it's hackable. Well, yeah, that's a fundamental nature of gold, is that someone could break into your house and steal it. It's a physical property, and somebody could steal that too. I don't think it really sets it apart from gold. Like, yeah, everything has a fundamental idea behind it, and everything could be flawed in some way. Everything could be stolen in some way. Everything could be broken in some way. Yeah, I suppose maybe I agree. If someone wrote a program, it's probably hackable, but that doesn't make it bad. That's just the whole point of Bitcoin, is that somebody wrote it well enough and strong enough, and with the whole idea of encryption and everything, that maybe it is hackable, but it's really, really hard to do that, and it's probably almost certainly not going to happen, at least as far as we can tell. And again, we don't have scientific evidence, but that's what I think.
I think that his point is a little too simple. He just says that he doesn't trust computers because it can be hacked. But like you said, anything can be hacked, and I think it's a little different to say you can break into someone's house, right? That's more like saying that MtGox was insecure. But to the point as to whether Bitcoin itself is insecure, I think we've shown that that's not the case. I do think that anything can be manipulated. If you look at the old gold coins and even U.S. currency coins before the year 1965, they're made of silver. So the reason we have these ridges on the edges of our coins is because if you were to trade this money in the population, you might find that often the edges were shaved off so that you'd keep some of the real money with you. And so they added these ridges so that you could tell if somebody was, scheming a little off the top. So to say that gold is not hackable, I mean, we're always finding that there's bars with tungsten inside, or we've had to make these advancements in coins by adding ridges, and now we even have some laser engraving on the better bullion. I just think it's a little one-sided to say that a computer can be hacked, but that real-world items cannot be hacked themselves.
Yeah, and it's a little different to say that a physical item is hacked, but yeah, it is the same idea. It can be manipulated, you're right, and people can use it to sort of con people or trick people or whatever. So Number 3, Bitcoin is not a robust, self-sufficient system, but needs computers, the internet, and public confidence. Any of those fade, so does Bitcoin. I totally agree with that.
Yeah.
It is true. It's not self-sufficient. It does need computers. It does need the internet, public confidence. And this is something I said in my response to this email, I think, is how you're right. There are ways, very unlikely, but there are ways that Bitcoin could go down if, say, the internet went down. You're right. I agree with that. And I guess that's part of the reason that I told him I'm not asking you to put your faith in it. I just want you to get your facts right. But you're right. There are reasons that if you believe the internet could go down, then maybe you don't want to trust Bitcoin, and that's fine. But our definitions of an extremely unlikely event might be different. You might think the internet could go down. I don't completely agree. And this is kind of a theoretical thing, but another thing is that if you really wanted to, you could have Bitcoin running on your own, just like one computer could just be mining away and even do like transactions within itself. Now that's really weird. And if you did get the internet back online sometime, then probably one person's blockchain would overwrite someone else's blockchain and things like that. But that's just an idea. But the bottom line is he's right. It does need computers and it does need public confidence. We trust that those things will continue, and I guess he doesn't.
I can't remember if it was Tim or Daniel. I think one of you said this last time, though. If the internet goes down, I think we have bigger things to worry about than Bitcoin.
Yeah, that'd probably be true.
I think I agree with this as well. It's just that I think there's more than just the internet going down that can make Bitcoin a problem, especially in more of a direct location. So if you have a very overbearing government that is controlling the internet, that's much more likely to run into problems with Bitcoin. Or if you have just somebody who doesn't want to use the internet all the time for privacy reasons, I think that also creates need for something else. But overall, I'm with you guys. I don't see the internet going anywhere anytime soon.
Right, and I think we have mentioned that before, how like the government, as much as we hate it, it really is powerful, and they convince us to hand over our money every April. So if they pulled the right strings, they could convince enough people just not to use Bitcoin probably, and hopefully we can avoid that. But you're right, there are more threats than just the internet. One last thought on public confidence is that that's basically what gold needs too. There's very little utility for gold compared to other things. Really, the only reason it has value is because people are confident in it and people give it value. It's not like it's useful for very much other than maybe jewelry and the coolness factor. I don't know. But I think gold needs quite a bit of public confidence as well to have value.
The difference here, though, is that gold has a 5,000-year track record.
Yeah, that's true.
And I don't think that means Bitcoin can't succeed again. But I think later on, and we'll see that Sanders also makes a good point that Bitcoin can have competition. I mean, gold and silver, you cannot recreate that. Those are just the natural properties of those material physics. It's just with Bitcoin, you can literally copy it. And if for some reason the developers made a terrible mistake in something and the system went awry, or there's just a better Bitcoin out there, you will find that we might have to change the protocol. You'll never change to a different gold. It just doesn't exist.
Yeah, that makes a lot of sense. And you're right, gold doesn't really have competition. Number 4. No one has ever shown me why Bitcoin is valuable other than some people want it, in what appears to be a gambling frenzy. In the 1970s, some people wanted polyester leisure suits, and they commanded high prices. Today, they're less valuable. That's interesting, I guess.
I don't know what you'd call the gold rush other than a gambling frenzy.
Well, I mean, but the gold rush wasn't because everyone wanted gold. It was because they found gold in a certain area. Like, everyone already wanted gold.
Right.
Yeah.
I think this is more about he doesn't understand the use of the protocol. I mean, we're talking about payments across the world in seconds.
Oh yeah.
Things that you can programmable money. It's really the internet of money than it is just a currency that people tend to believe in right now.
That's almost one of our purposes here on the podcast, is simply to tell people about Bitcoin, what it's for, why we like it, what you can use it for, and maybe that's just never been clearly explained to him. And we like to say that the network, even aside from the currency, the network is really revolutionary. I guess maybe he just hadn't heard that or doesn't understand how it works well enough and things like that.
Well, I think this one doesn't really even have anything to do with him saying that Bitcoin's broken. This is just him, like someone like Peter Schiff saying just that it's a frenzy and, well, people just want it, but gold's better. And this is just more of an attack on Bitcoin than him trying to say that it's broken, I guess.
Oh, you're right. And I meant to make that clear at the beginning.
Oh, you may have. I don't know.
Is that this isn't entirely about MtGox and the difference between MtGox failing and Bitcoin failing. This is really just a whole list of criticisms of Bitcoin that he has. And that's part of the reason that, as much as I respect him as a gold investor, he's really been annoying me because he's not been responding to my main argument, which is that Bitcoin is fine, but it was MtGox that failed and is not trustworthy and things like that. So another thing with the gambling frenzy, it's unfortunate, but in some cases, I mean, that's why we've seen these huge bubbles. In some cases, that really is the reason people are interested in Bitcoin. A lot of people don't understand what it really is about. They don't understand what it's for. They just see a rising price and jump in and hope to make money. They don't care about Bitcoins. They care about making dollars. And it's a little imperfect, and it makes things confusing, and it causes some people to lose money when things aren't handled correctly, and that can cause problems. And, when it crashes, the media gets all upset and everything. So that is true to some extent. For some people, it really is just a way to gamble, and they're more interested in dollars than they are in Bitcoin. Number 5, Bitcoin is not exchangeable for anything else. It is not backed unless somebody else will take it from you. I suppose that's basically true. It's not guaranteed in any way. Like, the government doesn't do it anymore, but they used to back your dollars with gold, and it was guaranteed that if you brought your dollar to the place, you could get gold for it. And in one way, that's not exactly true with Bitcoin.
The problem with this is that, and this is something I've written about recently, I'll be publishing it pretty soon, but I wrote on a comparison between Bitcoin and gold. And I think that by just saying Bitcoin is not backed by anything, the obvious next question is, well, what is gold backed by?
That's a really good point. And actually, I think we have mentioned that before, but that's definitely a good point.
My conclusion was that they're literally both based on physics, actually. If you think about Bitcoin being backed by the cryptographic proof instead of the trust in another person, as Nakamoto put it in the white paper, we learn that the cryptographic proof is mathematical relationships, and this is why we say Bitcoin is based on math. But gold is very similar in that its properties, its natural properties, are completely predictable. It will always react in the same way if you push the same forces on it. And we know that it's made up of atoms and elements that is what we have named gold. And so if you really think of physics as explaining these forces, we know that the language for physics is math. That's exactly how we describe every relationship in physics. And so I think that as long as these relationships hold, just like the mathematical relationships in Bitcoin, we can agree that both of these are based on some properties that will not be changing anytime soon. But fiat currency is literally based on the authority of an artificial construct, meaning a government or some other authority. As long as the integrity of that authority is fine, then perhaps the holders of that fiat currency will not lose value. But as soon as that integrity falters, or the dominance of that fiat currency issuers falters, then those holders will lose value.
That's actually fascinating. I never took things that far. I would just have said that okay, maybe you're right, Bitcoin's not backed by anything, but neither is gold, but that's a really fascinating idea. They're both backed by fundamental natural principles, and if you believe in math, then you can probably believe in Bitcoin, just the way that you believe that gold is this certain construct of protons and neutrons that can't really be artificially created. That's pretty fascinating. Number 6, and this is, I think number 6 and 7 are really the only time that he answered my question to some extent. I disagree with you about the MtGox debacle. As I understand it, the thieves exploited a weakness within Bitcoin itself, so it wouldn't have made much difference where they were stored. The Bitcoins were subject to theft. That's basically the exact opposite of my whole point and what I was trying to say to him. It wasn't a weakness within Bitcoin. It was a weakness with MtGox, and it makes a huge difference where they're stored. If you have your own private keys, then they're not really subject to theft. I mean, there are some extremely theoretical ideas. Maybe if somebody generated the same private key, extremely unreasonable, but possibly possible. I don't know. But really, the bottom line is, if you have your own private keys, they're not really subject to theft. And that's about, I don't know, is there anything more than that to say?
I just want to say, just as a counter argument, if it's the problem with the coins itself and not MtGox, then why was all the money stolen from MtGox and nowhere else?
Well, yeah, that's definitely true. I mean, some other exchanges actually have fallen to this. Maybe not exchanges, but other Bitcoin companies have, I think, fallen into this sort of thing. But the point is that there are ways to deal with it. It's not a problem with Bitcoin. It's a problem with the way that people were implementing Bitcoin.
I mean, it does matter where you store them. I think he's
Absolutely
definitely incorrect on that. I do agree that Bitcoins are subject to theft, and in this case, it was because of so many transactions going through the public and all these trades that they were more susceptible to theft, specifically because Gox did not implement a fix for the malleability problem. But I just think that he probably maybe doesn't understand that whole issue, and so he's lumped it up with, well, it doesn't matter where they were stored because they're subject to this theft. I mean, obviously, if you have a cold storage and your private key and you took the precautions, I very much doubt that you're going to lose those coins unless somebody physically takes hold of that.
Yeah, I think we were talking before, Daniel, a few days ago, and I brought this up about him saying that where you store it doesn't matter. I mean, maybe I'm taking what he's saying too simply, but that's like trying to argue that $1 is bad because someone... I mean, we talked about physically stuff being able to be stolen before, but it's like saying that, okay, you leave me someplace with a wallet full of $40, and then I set it on a bench in the mall or something, and then I come back an hour later, I'm like, oh, well, it's gone.
And then blame the dollar.
Yes, and then I blame the dollar, and I say, we're sorry, we lost all your money. And I say, well, Daniel, you can't blame me for this because, I mean, the dollar being there, it's physically there. I can't... I mean, no one would make that argument. That'd just be stupid. No one would trust that.
You're right. The last phrase that he said in point number 6 was, it doesn't matter where they're stored. The Bitcoins were subject to theft. Well, anything is subject to theft. That doesn't make it bad. It's just the way things are. So, yeah.
Yeah, maybe his only argument is that they're more subject to theft than anything else, but I wouldn't agree with that.
No, yeah, because the rest of the internet world does wonderful with keeping information of customers secret.
Right.
Number 7, and this is the only other one that had a little bit to do with the MtGox idea. Number 7, with all due respect, Bitcoin cannot be owned physically because Bitcoin has no physical existence. It is a string of electrons stored in a computer somewhere. Printing out a key and holding it is not physically holding the Bitcoin, any more than taking a photo of my wife and hugging it equals hugging my wife. That's a difficult question because he's right in some ways you cannot own them physically, and they are kind of electrons in a computer somewhere. But what I would say is that even though it's not technically, like by definition, it might not be physical possession, I would say that ownership of private keys on paper, or maybe even on your computer, has almost all of the same properties as physical ownership of a bar of gold has. Maybe it's not technically physical, but it has a lot of the same properties of physical ownership. And by that, the main thing that I would say by that is that if you print it out on paper, it's not really subject to theft unless someone takes that piece of paper from you. And that's how, even though you're right, it's not quite physically owned, it's still that property, the fact that it cannot be stolen unless someone breaks into your house and takes that piece of paper. I think that's the main property of physical ownership that we're talking about here. And I think that you can have that for the most part with Bitcoins.
I think I totally agree with Sanders here, to be honest, because as much as we can take hold of that private key, at the end of the day, we're talking about something that's intangible, right? So when we talk about goods, we can think about them as terms of tangible goods, which are in the physical world, or intangible goods, which is something like intellectual property, which, I mean, is a whole other argument. But even when you have that string, all you have is a representation of that ledger piece on the blockchain. And should somebody else learn that information, you can keep the physical form of that information in hand, but they still have the information that will unlock that Bitcoin. And so it seems like it's similar to physical ownership, but I think you have a physical representation of this intangible good. And at the end of the day, it's not like gold, in which you cannot say, oh, here, check out my gold, and then that person runs away with that information and somehow also has that gold. I think that's what separates the physical from the intangible here.
Yeah, that is true. The idea of information versus anything physical is definitely important in life. I don't know, in all kinds of philosophy and everything. There's a difference between information and anything physical. And I agree with you, and that's what I meant. Yeah, it's not technically, I wouldn't technically call it physical ownership, but I think you still kind of have that property of nobody can take it unless they physically break into your house and steal it. And I think even though, yeah, it's not quite physical, I think that is enough for me to call it physical, or to use it as if it was physical, because except in that theoretical case, unless somebody just generates that same key by chance.
It's an idea, so it's the same thing as if you have an idea, is that idea physical only because nobody else can get to the idea unless you tell them yet? I don't know. I mean, that's gets a little philosophical, because you can say, well, it's in your mind, but it's not a manifestation in our physical world.
That is difficult. You're right. I guess you could say the same thing about an idea. It can't be stolen unless somebody, even if you write it down, it can't be stolen unless somebody takes that piece of paper. And I guess you're right. It would be hard to say that an idea is physically owned. Yeah, I don't know. It might be mostly a syntactical disagreement here. It just might have to do with the way that you define physical. And like I said, I even agree it's not really physical, but to me, that property that it can't be taken unless somebody breaks into your house, to me, I think that would be enough to consider it almost physical. I don't know. It's hard.
At the end of the day, I don't think it speaks to whether or not Bitcoin is useful. It is a difference between gold and Bitcoin that we have to consider.
Right. And that's true. I think we would agree. Even if it wasn't at all physical in any way, we still trust Bitcoin.
The whole argument about it being like the same thing if he hugs a picture of his wife versus hugging his wife, I mean, this is another thing where it's like, okay, we're not talking about this. This has nothing to do with what we're talking about. I don't have to hug my money. I just need someone else to accept it.
Right. What I was thinking was almost the same thing. Like, it doesn't really work with the wife because you're right. You want to hug your wife. But let's say if we're talking about value or something like that. Okay, let's say you had a picture of $1. And you're right. It's not the same thing as $1. It's not physically that dollar. But suppose then that that dollar was non-existent. Somebody ripped it up into shreds and put it in their blender. Then, if something is a scarce asset that cannot be reproduced, then that picture could really have the same amount of value. Because, I mean, as long as everyone knows that it was destroyed, the real dollar, and that the picture is the only thing around that represents that dollar, and as long as it can't be reproduced, which with the picture, I guess you could reproduce it, but not with Bitcoin, then there's no reason not to give it the exact same value, because everyone knows that that's the only thing in town that could have any connection to that dollar and that could ever represent that dollar is that picture of it. So that's almost how it is with Bitcoin. I mean, you're right, it's not physically that thing, but there's nothing else that can represent it. It's not reproducible, and so why not give it the same amount of value? I don't know.
If you have plastic pennies, are they worth the same as real pennies? Or are they worth more?
Yeah, 3 times as much. You're listening to the You, Me, and Bitcoin podcast. We need your help. For starters, we would love it if you would take the time to visit our website, youmeandbtc.com. There you can find a unique Bitcoin address for every single podcast and article. We would be forever grateful if you could provide some feedback by tipping your favorite content. We also have a Facebook page that needs some likes. You can find a link on our site or go straight to facebook.com/youmeandbtc. We'll keep you updated there about ourselves and any important Bitcoin news throughout the week. Lastly, if you haven't already, make sure you subscribe to the show. You can find us on iTunes or sign up to receive email updates on our website. Thanks for your support. Number 8 is a little more theoretical. There are 2 and only 2 theories to explain money, both of which have been known since before Aristotle. Namely, the social construct theory and the barter theory. In the first, money is simply a social construct that has value because we all agree that we will give it value. This is today the dominant theory upon which all national fiat currencies and central banks are based. It is the open door to massive social fraud and exploitation. Bitcoin relies on this theory. Maybe we should do one theory at a time. These are both in point 8, but it might be better to do one theory at a time. So we'll start with that, the social construct theory. And he says that money is something that has value because we all agree to give it value. It's the dominant theory now, and that's how fiat currencies and central banks work. But it opens the door to massive social fraud and exploitation. Yeah, on the one hand, I would say that that's how Bitcoin works. It does have value because people give it value. I would say that there is a little bit more behind it than that because, like we've been saying, there are reasons that people give it value. So, I mean, you're right. It really is just because people give it value, but there are reasons that they trust it and give it value. And to me, that makes it worthwhile, I think. I understand that's how fiat currencies and central banks work. And I understand that that is subject to fraud in the fiat currency system, but I don't exactly see the door to social fraud with Bitcoin. There are ways, like I'm not saying there's no such thing as a scam with Bitcoin or anything like that. Of course there is. You know, someone like MtGox could run away with your money, but that's because you're trusting your money to them. But if you take Bitcoin on its own, and if you have Bitcoin, if you keep it yourself, I don't know, does it open the door to social fraud and exploitation just because it's Bitcoin? I don't think so.
I don't think that this actually applies correctly. He's saying that we now live in a system where we're using dollars only because we all believe that dollars have value. In some way that's true, but in another way it's not, because the reason we use dollars is that we need to pay our taxes in it. And the U.S. is supported by the amount of strength it has in the world from its military and other means. But to say that we just use these dollars just because we all agree they're worth something, I don't think is correct. I think that we might use something else if it wasn't a monopolized system. Bitcoin we use because we know that this that this Bitcoin represents a slot on the ledger, and that enables us to use the protocol. So obviously there's going to be some people in both dollars and Bitcoin that are only getting into it because they need it for the value of it. But Bitcoin, if you actually look at it all, having a Bitcoin enables you to utilize the power of the protocol. And so early investors will have more of that power in the future.
Yeah, I think that makes sense. It doesn't seem like there's anything wrong with the fact that the people who use the protocol are gaining from that. I don't think there's anything wrong with that. I mean, he used the word social fraud and exploitation, but yeah, I don't think that's what that is. This is also point number 8, and it's the second theory that he mentions. The other theory is barter, that every exchange of money swaps something of value for something else of value, i.e., you give me a goat, I give you an ounce of silver. I do not say that these things have intrinsic value, only that they have value, since value is subjective. Any system in which the representations of money, currency, electronic deposits, etc., are freely exchangeable for the backing of money, gold or silver, is a just and honest system. That's why we don't have one in America today.
I don't know. Just to me, it seems like he totally misrepresents the difference between a barter economy and social construct theory or whatever he's talking about. It almost sounds like he's like making up these things on the fly. But to say that the difference between a bartered transaction and a social construct transaction is that in the barter thing they actually have value, I think that's not really the difference. I think the only difference is that barter transactions are, the value is like, people agree on the value on a transaction to transaction basis. So like I might trade a beaver pelt with Daniel for his hoe or something like that. I mean, a hoe isn't a farm tool. So yeah, I might trade Daniel a beaver pelt for some tool, but that doesn't mean that Tim wants a beaver pelt. In the social construct, we all have something that's agreed upon. It's social, so it can be used for more than one transaction. And I think that difference doesn't apply to gold versus Bitcoin.
I think you're right. I think that the social construct theory, maybe you could call that like a subset of the barter theory, because with the social construct, it still is bartering. It's still something for value for something else that has value. But I think we've called, not on the show, but we've said how money is a placeholder for a barter economy. When you have money, it just enables you to barter kind of more conveniently. It's a placeholder for value that lets you trade with anyone, really, instead of only the person who has what you need.
Yeah. Yeah, and that's like macroeconomics 101.
So in some ways, yeah, the social construct and the barter theories are very, very similar. I'm not sure how to really put Bitcoin in there. I don't know which of these would be better for it, because it is, like I said, it is a little bit of a social construct because, yeah, people just give it value and they agree that it has value. But in the same way, it's a barter in that it's kind of like just money, and it's a placeholder for trading value for value and things like that.
I think this question just kind of creates a false dichotomy.
That's what I was
I agree.
That's what I was about to say. Maybe neither of these really has anything to do with Bitcoin. Okay, so there are these two theories of money, but okay, Bitcoin might fit into them, it might not. You're right.
Well, I think it definitely everything fits under barter. It's just that when we have something that everyone agrees is worth something, it's easier to use as money.
Yeah,
so if everybody needed goats, then goats could be money. And actually, I think that used to be the case, at least for cattle. Cattle's often used for money back in the day, of course.
Yeah.
But he makes a jump at the very end. I don't really understand. He goes straight from, which I agree with, that value is subjective, person by person, and then he jumps to the representations of money and the banking system, or the backing system of gold and silver, and how we don't have that. I'll be honest, I don't think this point is congruent enough for us to get to the bottom of.
He was saying before about how Bitcoin's not backed by gold or silver. I mean, he says it again here. But, I mean, tell me if I'm wrong, but if stuff truly is subjective value, and he says, I do not say these things have intrinsic value, but then he makes arguments like silver somehow has more value than a shell intrinsically, or something like that. But, I mean, if you're looking at everything being subjective value, then just people like Mr. Michael or Moggy Metals or anyone who accepts Bitcoin for silver is, I mean, they're technically backing it, kind of. If you'd even call that backing, there doesn't need to be a backing to money. It just needs to be, as long as people are willing to, okay, I'll take this from you if you give this to me, that's all the backing you really need.
I understand what you're saying, Tim, but I think, Mr. Michael, didn't you say that you wouldn't call it backing?
Yeah, I don't think that's necessarily backing, because at the end of the day, you can have as many Bitcoins as you want, you can have as many pieces of gold as you want, but they're not representative of each other. Whereas normally when we think of a backed money, it's directly, this note will be paid in 1 ounce of gold, redeemable. Again, I think this goes back to our earlier points, which is that gold itself is not backed up by anything except for the natural properties of the universe. And so, again, I don't think this point of Sanders is something that's easily talked about.
Number 9. I'm all in favor of getting government out of the money business and abolishing all central banks. All right, that's pretty cool. However, this is the aorta of their power. Okay, yeah, I forgot about this point. This is probably one of my favorites, not in a good way. But anyway. However, this is the aorta of their power, so they are unlikely to give it up. Nor are they likely to allow a cryptocurrency like Bitcoin unless they can control it through the back door somehow. That's why I'm suspicious of all efforts at rapprochement between the government and Bitcoin. Governments have spent 40 years building a financial police state. Privacy is exactly what they hate, like Dracula hates crucifixes and sunlight. Will they now let it in? Isn't it awfully naive to expect them not to strike back? This is like, I don't know, he's like, the government's not going to allow it, so I think it's bad. Just like we all pay taxes, he's just surrendering the entire power of anything to the government. The government's not going to be okay with it, therefore it's bad. And I agree, the government probably isn't going to like it. The government's going to try and get rid of it and things like that. Isn't that all the more reason to use it?
Yeah, he says he's all in favor of getting them out of the money business.
So
and he says all this stuff, isn't it like awfully naive to expect them to strike back? So I guess it just sounds like he's trying to avoid punishment.
Yeah, it's like the only reason we pay taxes is because everyone just does what the government says and thinks that they have to do what the government says, and he's completely giving into that. Yeah, I don't know what else to say. He thinks the government doesn't like it, therefore we should follow the government.
I mean, it's not the first time we've seen private currencies pop up. We had the Liberty Dollar.
Yeah.
Right? And the Liberty Dollar saw extreme fight back from the government. And I believe the creator of that was convicted.
Well, he's awaiting sentences now. Yeah.
Right. But he was convicted. So unfortunately, that means that he'll be going to jail for creating this private currency. And I would like to hear what Sanders believes that means for the state of gold, because if gold can make somebody wind up in jail or it'll be fought against as private currency, then what separates it from Bitcoin?
Let's go out of order. I'll read number 11 just because I think it applies pretty well here, and then we'll go back to number 10. Here we go, number 11. I'm all in favor of advanced systems of money transfer, especially for privately issued gold and silver money such as goldmoney.com. But government has shown that it will not allow these. It attacks and strangles them wherever they show up. Goldmoney.com originally offered an account-to-account payment option, which they withdrew because of government threats to classify them as a money transfer agency. So from the government's standpoint, gold and silver are not money unless you try to use them as money.
Well, the government's standpoint back in the, I think it was the 30s, I don't know, it was under FDR. Yeah, they took all the gold, so yeah, don't have gold because the government doesn't like that.
Yeah, you're right. And I don't understand how he's like saying that Bitcoin is bad because you don't have physical ownership, and when you entrust it to someone else, it could be stolen. Isn't that exactly what happens at goldmoney.com or like the Liberty Dollar or whatever? You're entrusting your money, your gold that he says is the realest money there is, you're entrusting it to someone else, and with the Liberty Dollar, it did get stolen by the government. I'm not sure where goldmoney.com stands right now, but yeah, the government doesn't like it, and it's actually a similarity between gold and Bitcoin, not something that makes Bitcoin bad.
Well, with the Liberty Dollar, I'm not 100% on this, but I think the only gold that was stolen was from the creator. And so if you held it yourself, then you still had it. Yeah, so gold is still useful in the fact that you can literally have it physically. This goes back to our old conversation. And it's, I think, surprisingly enough, if the government wanted to confiscate Bitcoin and they saw these people with Coinbase accounts who are uneducated in putting it in cold storage, you'd actually have a much easier time than gold nowadays.
I think with the Liberty Dollar, you're right. A lot of people did physically own it, and it didn't get stolen, but they also did issue paper, and so when they stormed the warehouse, maybe some of it was the owners, but it was also whoever had the paper notes also then lost it. And
right.
I think in that conference, the Let's Talk Bitcoin, the episode that had to do with the conference that he was at, I think he said that just about all the stuff that was seized was backing for those papers. Yeah, people who had gotten his money. It wasn't his, I don't think.
Oh, okay.
I mean, it may have been. Like, he probably kept his separate from, like, the big warehouse where those were taken from.
Yeah, I just think it's interesting how he's all in favor of things like goldmoney.com, even though it's entrusting your money to someone else, which is exactly what happened with MtGox. So I'm not saying you shouldn't trust goldmoney.com. I mean, if you trust them, you trust them. Sure, that's something you can do. If you want to trust someone, go for it. But I don't see how that makes Bitcoin bad because you can entrust it to someone else. How does that make it bad? Number 10, I'm all in favor of privacy as an essential element of human liberty. But what could be more private than silver and gold? Once I give it to you, it's yours, end of story. You have it, and no one knows. I am in favor of privacy in money and in restoring the right to privacy, but Bitcoin won't do it because governments will destroy Bitcoin before they allow that. Again, that's the thing with he's just giving power to the government, and he's saying that the government doesn't like it, so let's not use it. So we already talked about that. I'm actually going to basically ignore that last phrase there. But the idea of privacy and money is, yeah, I agree with him. It's amazing, and it's something we need. And it would be fantastic to transfer any amount of money and let no one else ever know that. With Bitcoin, it's a little sketchy. I mean, you can do that if you're not associated with your address and if you don't make so many transactions that somebody could kind of analyze and relate them to you. I mean, if one person sent one amount of money to one other person without ever using Bitcoin at any other time, that would probably be pretty safely completely anonymous. But if you use it regularly, with the right analysis, they could come up with a good idea and try and put things together and things like that. So I definitely support privacy in money, and I think that's something, people talk about quite a bit. There's room for improvement with Bitcoin. There, with like CoinJoin and is it the dark wallet and things like that.
Yeah.
There's room for improvement there, and hopefully we can see that appearing pretty soon.
Well, I think that he actually has a good point here as far as gold being very private. It's something that if you own it, you own it. And as long as you didn't buy a crazy amount at the time, which was reported, then probably nobody knows you have it.
Absolutely.
Whereas I do agree also with Bitcoin. I mean, it can be good in masking your identity to maybe other private players so that the person next door doesn't necessarily know how much money you have. But at this point in time, I don't think it's that anonymous of
right.
of a money.
hopefully we see improvement there because, yeah, that's definitely something that's awesome about silver and gold. So we hope to see that soon.
Yeah, I was just going to say that it kind of, at the heart of all this, I don't think any of us are trying to say that Bitcoin is completely better than anything and it makes gold and silver obsolete. If that was true, we wouldn't have CoinStax's and Amagi Metals. If it was so much better, or if it completely replaced everything else, we wouldn't be trading it for other things. That's not the point. It's that it has value even if it doesn't do everything gold and silver do.
Right.
And it's still more private than using a credit card. So
Yeah, I think either way, we just win because it's not fiat. It's another currency out there that's private, that's in competition with these other inflated currencies, these other currencies that only have value because it's monopolized. And so the more of those we have, really, the better. And look, now we're talking about, gold versus Bitcoin, two excellent monies that aren't fiat. And I mean, at least for me, I learned a lot about money when Bitcoin came around, because if you didn't understand money, it was hard to get behind Bitcoin at all.
Yeah, definitely with Bitcoin, it's taught us all a lot. We've mentioned those ideas now and then. It's a learning experience when you get into Bitcoin. I remember basically Tim and I did this together, and it started with silver. I didn't have any financial or economic ideas that caused me to buy silver, other than I just thought it was pretty cool. I thought it would be cool to have some sort of an investment. I thought it was pretty. I mean, who cares? Why not just get some silver? That's kind of cool. And it was cheap compared to gold. It was cheap, and I could get 20 ounces of it, no problem. And it was very shortly after that, a month or two, that we started getting into Bitcoin. And we have learned a whole lot along the way about different currencies and how money works and how value works and ways that you can gain money and ways that you can lose money and things like that. And then ultimately how it applies to politics and the government and the Federal Reserve and things like that, and how those are really not the kind of things that we want because they aren't legitimate, they aren't fair, they aren't anything like that. Number 12. Finally, since Bitcoin has been so successful, what is to prevent someone else inventing another digital currency and chewing off a piece of Bitcoin's market, or even driving Bitcoin out of the market? Since the mining, in quotation marks, of coins costs nobody anything, and since they are not backed by anything, what differentiates Batcoin from Bitcoin? Where is the balance sheet to check solvency? By what criteria will we judge their relative value? By none save the ephemerality of demand, public confidence. And that's the only thing that backs fiat currencies worldwide. Where's the improvement? There's a lot there. Let's take it probably pretty much sentence by sentence. First thing he says is that what's to prevent another currency from chewing off a piece of Bitcoin's market or even driving it out of the market? Definitely. You're exactly right. And honestly, we kind of hope that will happen, because the only way that that would happen is if there was something better than Bitcoin that people ran to. So it would be an absolute good thing if that happened.
It wouldn't just have to be better, it would have to be so much better.
Right.
That people were like, okay, yeah, I already have all this stuff in Bitcoin, but that solves like all these problems, so I better switch over.
I mean, hopefully he agrees competition is good. And I think it sounds like we all agree here that if anything happens to Bitcoin from competition, it's because we found something that not only is better than Bitcoin, but also solves the cost of changing infrastructure. That'd be great. I think he does have a point where, again, like I said earlier, gold will not have competition, silver will not have competition. So I actually agree with him here.
I don't know. Maybe I could save this point for later, because this kind of gets into the public confidence thing too. But there are things besides gold. There are other metals. Like, who's to say that somebody in the future might decide that they like silver better than gold? I don't know if any of you guys have read Utopia by Thomas More, but they talk about how in this utopian society, gold is actually like valueless, and iron is one of the most valuable things because they can build things with it. And I mean, Daniel, you said this before that gold doesn't really have a whole lot of utility. So I mean, something could potentially replace gold. I mean, maybe it's less likely than something replacing Bitcoin, but it's still possible, and it still all depends on public confidence.
But the difference here, I agree with that. Something could replace it, but the difference between Bitcoin and gold is that Bitcoin is open source and copyable. You can recreate it.
Yeah.
Whereas gold and its competitors, in this case maybe iron, they've both been around, and we know the general scarcity of each of these. And I mean, can you imagine how much iron you would have to lug around for it to be worth anything?
Yeah.
It's one of the reasons gold is valuable. It's not just that it's a metal and cannot be recreated, but that it's scarce, that it's completely fungible. I mean, iron rusts. Like, a rusty coin would not be so nice to have in your pocket versus this gold. So there's reasons why over the last 5,000 years we've come to decide, okay, gold and silver, they're pretty good at being money, and I don't see that likely to change unless, the mining of asteroids becomes a real thing, which...
Yeah.
I wouldn't say that like iron or someone would replace it. It'd just be like a whole new source of gold was found or something like that, maybe, and it just more supply would just drive the price down of gold.
I think what Mr. Michael was trying to say is with Bitcoin, you can basically, a human decision can copy Bitcoin at any time with almost zero effort. That's not true with gold and silver. Yeah, there are ways that they might be replaced or devalued, possibly. But with Bitcoin, it's just if someone wants to replace it.
I think this is a good lead into that next sentence, though, because it's the source code's copyable, but then he talks about mining, right?
Right, yeah. So here, I'll read the sentence. The mining of the coins costs nobody anything. Well, yeah, and since they're not backed by anything, what differentiates Bitcoin from Batcoin? Yeah, definitely big red X there. Mining is like, especially over time, it's mining equipment is improving and maybe becoming cheaper, but the difficulty and the expense of mining X amount of Bitcoin is definitely going up a lot. So
right.
That is just plain wrong. But that's what we were going to get to, is how, yes, Bitcoin is copyable, but only maybe like the protocol or like the system, not even though it's a short history, it has a pretty good and pretty strong few years behind it, and a lot of companies and
infrastructure.
Yeah, infrastructure, that's a perfect word. And over time, it's becoming less and less replaceable, just like with gold over thousands of years. It's becoming, well, it is established and set and things like that, and it would be pretty hard for iron to replace it. With Bitcoin, we don't have nearly that much, but it is becoming more established and infrastructure is sprouting up. Miners are improving and increasing, things like that. So it is copyable, but only part of it, not the infrastructure and things like that.
Yeah, I agree.
The next question is, where is the balance sheet to check for solvency? That's the whole point of Bitcoin.
The blockchain.
Yeah, exactly. The whole point of Bitcoin is that it's decentralized and everybody has that copy of the blockchain. I mean, most people, if you have a client. And yeah, I mean, another big red X. Everybody has that. Everybody can see it. It's open.
Exchanges are even becoming transparent, which I think is a great move for the Bitcoin economy. Since the MtGox collapse, I think it was Bittrex just announced that they're going to keep transparent books. I'll have to check that, but yeah, that's definitely a great move.
I hadn't heard a ton about transparency, but the idea of, I guess that is transparency, segregating funds and telling people what addresses have their money and things like that, so people can watch their own money instead of having a shared wallet and who knows what's back there. Yeah, you're right. That is huge, and we definitely can make a move towards that sort of thing. So then, with MtGox, I mean, we know there's solvency with Bitcoin, but nobody knew whether or not there was solvency with MtGox. So yeah, it would be good if they were transparent and they showed each person where their money was and they could see it on the blockchain. Yeah, that would be amazing. Next question is, by what criteria will we judge their relative value? The market,
that's
I guess?
Not like a question. He does say that it's going to be judged by public confidence. That'd be the market. It'd be whatever people are going to accept it for.
I mean, I think that's the same for anything.
Yeah.
Yep, that's how it goes with gold too. There's just markets and exchanges, and that's where the price comes from. That's where their relative value comes from. And he says, and that's the only thing that backs fiat currencies worldwide, talking about public confidence.
Yeah, I mean, Rob said this earlier. Public confidence doesn't even back fiat currencies.
Yeah, I don't
it's
like
because we have to pay taxes with them. It's because that's what's like demanded.
And monopolized.
Yeah,
I mean,
yeah.
Like we said with Liberty Dollar, there was competition coming. It's just that it gets shut down.
Yeah,
in fact,
label you a domestic terrorist.
That's maybe what
Right.
differentiates a fiat currency from one that isn't, is that it's not determined by demand.
Yeah, that's right. It's not determined by market demand.
It's kind of a general question, and it's like what we talk about all the time, but his last thing is, where's the improvement? Well, that's all the things we've been talking about. Now, it depends. If he's saying, where's the improvement from fiat currencies? Well, yeah, that's what we have been listing. If he's saying, where's the improvement from gold? Well, actually, we're huge supporters of both of them, and there are some ways. Obviously, with Bitcoin, you can send it anywhere instantly, or
mobility.
Yeah, exactly. So there's advantages of both ways. And then with gold, like we were saying, it's a lot more physical and a lot easier to define who owns it, and then anonymous transfer and things like that.
It's tangible. It's completely private. I think there's advantages to both.
Absolutely, yeah.
And it's a lot prettier than Bitcoin, I would
For now,
unless you make a gold or silver wallet or physical coin. It's a cool combination of both of them. He started number 12 with finally, and then number 13 starts with finally second. I know what a blow-off chart looks like, and that is Bitcoin's chart. That hyperbolic rise is the invitation to the funeral, the kiss of death, the death certificate. I would never buy anything at that state of a chart. And this is where basically he is a very experienced investor, and he does know a lot about charts. And he's probably right. That probably is what a blow-off chart looks like, but that doesn't mean that it has to be what that is. I mean, even if he was right, and this, I suppose, would be the best argument I could give, even if he was right, even if Bitcoin went back all the way down to $1 or $2, so, I mean, it's still there, it's still useful, it's still Bitcoin, and we say this a lot, but the whole purpose of Bitcoin is not to make you dollars. The purpose of Bitcoin is to be convenient, to get rid of the government, things like that.
Well, the chart he's referring to is really the adoption curve. And I think this applies to any technology. The only difference is that now we're seeing a direct valuation of the technology since its start. And that's something we haven't seen. You know, I've mentioned this before with IPOs like Facebook or Twitter or any other technology out there. We don't usually have a price tag on it for its way up. And the volatility we see is every bump in the road. It's very evident because it's not a giant market yet. But I wonder what the chart looked like for the first gold coin that was minted. And people said, hey, this is better than the nuggets of gold we're carrying around. Look how great this actual coin is. Let me trade in stuff. And the adoption of that coin was probably huge. And it probably went through a great period of quick adoption, and much like Bitcoin, was exponential. I wonder if maybe people like Mr. Sanders often miss the point that this is a technology that's taking hold.
It is different than an IPO because it's not just given a value and then going up. It's being adopted and understood more and things like that.
IPOs don't happen until pretty much the growth is over, right? Twitter got huge and Facebook got huge. Snapchat didn't get bought up, but a lot of these technologies, they don't actually go to market until everything's done.
Right, established. But you're right, with Bitcoin, we see it's been valued since it was created, essentially. So it looks like a blow-off chart, but we're actually seeing, in the chart, we're seeing the parts that we don't see in the other charts. So
right.
That makes a lot of sense.
He says, I know what a blow-off chart looks like. I'm just asking if you guys have ever seen another chart that looked like that wasn't just an inflation chart of just over the years. Like another chart of showing something gaining this much value this quickly.
Well, he might be referring to things like the dot-com bubble.
Yeah,
Or,
okay.
I mean, he made a point of the frenzies earlier, like tulips. And so anytime you get something that the demand is kind of hyper and manic and not based on fundamentals, you're going to see some crazy valuations.
Yeah.
I can't say that I know what technically defines a blow-off chart, other than just...
I've actually never heard it phrased that way either.
I'm just meaning, like, even in the dot-com bubble, did stuff go up, whatever it was, 10,000%, what it was back when it was $1,000?
I don't know off the top of my head, but I was researching it the other day. If you look up some actual stocks, you can see them. I don't know if it's 10,000%, but they go through some crazy drives up, and then everyone disappears because there's no money for all these dot-coms.
Number 14, the last point that he gives here. Finally, third, if you want privacy and liberty, then you must forego the convenience of electronic transfer and do business with silver and gold. That's kind of just like saying, I don't know if it's like a summary or just a conclusion, but he says, forego electronic transfer and use silver and gold, which, like we've said, I mean, using a truly anonymous, physically transferable object is beneficial when it comes to privacy and liberty. Yeah, I mean, gold helps with that, definitely.
I just don't think it's mutually exclusive. He's presenting this as the only way you can be for privacy and liberty is if you don't use Bitcoin. I very much agree with him that, at least for privacy, certainly silver and gold are a little better right now, and maybe even for liberty, because everyone can understand gold and silver. When you see it and hold it, it's right there in front of you. There's no Bitcoin 101 to sit through. But to say that it's mutually exclusive, that you can only be for these things for one or the other, I just don't agree.
I'm with you there.
He says one or the other, but we absolutely love both of them, so. And we think they both have their own ways of promoting privacy and liberty, and it kind of just depends what you need at any given time. If you live next to someone and want to trade them anonymously, sure, use gold or silver. If you're trying to send money around the world, that would be a better time to use Bitcoin. And yeah, I guess you would have to take some precautions to preserve your anonymity if you needed that and things like that, but it's doable, and there are definitely all kinds of benefits to Bitcoin. I mean, that's all 14 points. It's been great. We've been wanting to do a discussion of value and intrinsic value for a while, and we covered a lot of that here and talked about the differences and similarities between precious metals and Bitcoin and the strengths and weaknesses of each thing and stuff like that. So, again, we can't and we don't really even want to ask or force in any way Mr. Sanders to trust Bitcoin. We understand that you don't have to trust it, and if you don't want to, then fine, don't. That's perfectly fine. We understand there are dependencies like the internet that you might not trust, and that's okay. But ultimately, we do trust it. We have our ideas and think that it will work out, and that it is trustworthy, and that it won't disappear or anything. Or at least not unless something better comes along and things like that. So it's been a great discussion. Mr. Robert Michael, the founder of CoinStax's.com, was here with us. Thanks again for joining us.
Yeah, thanks for having me. And if anybody wants to follow on Twitter, it's at CoinStax, or if you want to follow my Twitter, it's at Rob A. Michael. And of course, check out the site. We're still looking for feedback, so be sure to send an email to info@coinstax.com. We're just trying to make sure that the service is best for everybody.
Yeah, please, definitely, everyone, check that out. And yeah, make a purchase too, because like we said, we like gold and silver just as much as we like Bitcoin. So we definitely encourage people to get some. I mean, I guess we're supposed to make disclaimers about we're not really financial advisors and don't come to us if you lose all your money. But
Or go to Daniel.
Yeah, not us.
One last thing that we usually tell people, and again, this is financial advice that could be completely wrong, but one thing we like to encourage is if you spend your Bitcoin, it's often a good idea to buy it back with dollars because the value of the Bitcoin could continue to rise as it has done. I mean, yeah, it just depends how much money you have and what all you want to invest it in, but it might be a good idea to have that same amount of Bitcoin if you think it's going to keep going up. So you can consider that as well.
Yeah, I think it's also just important to, again, not a financial advisor, but if Bitcoin sees a spike, that might be a good time to diversify into something else.
Oh, absolutely. Yeah, that's true. I mean, I guess that's almost the opposite of what I was saying. But yeah, if your goal is to cash out instead of keep holding on to Bitcoins or something, then yeah, I would say it's probably better to do it into gold and silver rather than fiat unless you need the money. But yeah,
Right.
If you're cashing out, gold and silver is an amazing way to do that and to secure your gains if you want to secure them.
Secure them in non-fiat, nonetheless.
Yeah, absolutely. Absolutely. Thanks for listening to episode 12. I'd like to offer one last thank you to Mr. Robert Michael for joining us this week. Before we finish things up, I want to mention our brand new website. We got it completely redesigned recently, so you'll want to check that out. umeandbtc.com. And remember to tune in next Thursday.